Hi guys, welcome to this week's mentorship video, and we're going to talk a bit of what we expect in the coming week regarding how we are going to trade the week. And as always, we're going to look at dollar index first. So the barometer to all our trades is the dollar index. By now everyone knows that. So as you can see, I've had this setup on dollar index I think for the past 3 months now, since December when we tested that monthly bullish order block. So this setup has been guiding me for the past 3 months. All the trades that I've been looking at, all the trades that I have taken, all because I managed to leave the chart untouched with all the order flow concept that I had marked on it intact. So with that said, I would advise you guys to also do the same, where you have your own chart, or you can create a profile where you have charts that are not going to be disturbed, where you're not going to change anything, or you're going to do some changes to it or add indicators and all that. Not that we use indicators here, but I know some people they do. So now, looking at dollar index, I don't want to make this video quite long. Looking at the week ahead, there's one thing that we need to put into consideration, which is the bill that was passed yesterday, the stimulus bill of 1.8 trillion that was passed by the Senate yesterday morning, which was a weekend. So the opening of the market is going to be crucial. Monday's range is going to be crucial on how we approach our Tuesday, Wednesday, and Thursday's trading day. So with that said, looking at where dollar index is currently, we're just trading off the lows of our monthly bullish order block from February 2018. And price has been finding support. Each time it comes back down to 89.80, price has been finding support. And if you're in the mentorship group, you know already I mentioned that any break below 89.80 signals a change in our forecast. So as long as price is still playing above 89.80 and above 90, I'm going to be bullish on dollar. I'll still be hunting for bullish evidence when I go to lower time frames. So looking at the monthly chart, we had the fair value gap filled, right? So now that is now irrelevant. We have filled the gap, but we just traded off the high of the gap and then traded lower back into the 90 zone, which is our weekly bullish order block. So with that, in the coming week, I'll be hunting for price to trade higher. With the stimulus that has been passed, I expect dollar to gain momentum a bit, not much, but a bit. So as you can see, we've been ranging since last week of November. We haven't managed to clear up last week's November's weekly opening price, and if we did, it was just to fill up the fair value gap and we traded lower. So in the coming week, you can see how last week's price action turned out to be. We traded into our main threshold of our bullish order block, and we found support and traded higher. So in the coming week, I'm expecting the same scenario to unfold. If it's a case that we trade lower, I'm only looking for price to come to 90.60 before we find support to trade higher. So that's the forecast for the upcoming week. From my own analysis, I'm expecting price to be bullish on dollar. That means I'm going to be shorting euro, I'm going to be shorting the pound, I'm going to be long on Usd Chf, USD CAD, and gold. I'll be hunting for short trades. So now let's go on to a daily time frame. So now on daily, you can see how we lifted off from the 89.80 zone. That was on Thursday, with price clearing up the stops and rallied to the upside. Now I want you to focus mainly when you're doing your chart analysis. Focus on this imbalance here, right? Thursday and Friday, price opened with a gap, closed the gap and rallied away. So this is the area. This is an ideal area when price comes down and it will definitely find support and rally to the upside. And if you look at Friday's price action, Friday's candle on its own, that's a liquidity void, and expect price to fill up this area here at one point in the coming week or sometime in the coming weeks. Expect price to fill up that gap and trade to the upside. So if I'm looking to go long on dollar index from this range here, my target will be the 91,400 zone. That will be my initial target. That will be the fair value gap that was closed some few weeks ago. So I'm expecting price to retest this high here as a target. So I'm sure you can clearly see where I'm going with this, and why I'm emphasizing that I'll be hunting for long trades on dollar. So if you go to our entry time zone, which is H4, right, on H4 you can see we are going to experience a retracement, guys, on dollar. We are going to experience a retracement to this area here. This is our imbalance on the daily time frame. We should see price testing the 90.25, the zone between 90.25 and 90.18. We should see price test that zone before we start hunting for long entries. And the imbalance, when you look at the imbalance on H4, you see this last down close candle here, that now becomes your bullish order block. If it's a case that this zone does not hold, we close this with big bodied candles to the downside, then your next level of interest is 89.80, or you can probably look at this area here, which is 89.88, right? That is if 90.25 or 90.18 does not hold. When I say does not hold, I mean we're gonna see price blasting through that level with big bodied candles like this. That's why I'm emphasizing if the level does not hold. But when we see momentum dying as we approach the 90.25, we see small bodied candles like this as we approach 90.25, then you know we are going to have an expansion to the upside, because this is a consolidation. After a consolidation, market is bound to expand. So this is my outlook on dollar index. I'm expecting price to be bullish, but take note, the opening price, the Monday's range, which we are going to discuss Monday evening, the Monday's range is very important, because we don't know what the stimulus package is going to do in relation to dollar movement. And we also need to take note how the bond market is going to react, as we discussed in our Saturday class, guys. Remember, those who came to the class, how the bond market, the three interest rates triads, 30-year bond note, the 10-year bond note, and the 5-year bond note, how they affect the movement of dollar, how you identify smart money participation in those interest rates triads can help you to unlock this price action here on dollar index. So we need to see how those assets trade during the Monday's session. So it's very important that we wait for Monday's session. I know, yeah, we might say, oh, we made some trades on Monday and everything, but we wouldn't have known. You don't want to go blindly in the market. You must go with clear evidence based on your analysis on what you need to do. So with that said, Euro USD, we are trading off from this supply zone here, this bearish order block. This is where we are trading from, and price found resistance here, and we have dropped for the past 2 months. Price is trading back to the 1.23 zone and finding what? Resistance and falling to the ground. As we are bullish on dollar, we are going to be hunting for short trades on Euro USD, meaning we have to consider price trading back into the premium range where we hunt for short trades. And if we come to the weekly chart, we've got our high here and this low. This is a significant swing point from the highs to the low. Now let me get rid of this guy, and then I'm gonna zoom in a bit. Now with the fibs placed, you can clearly see, remember we are bullish on dollar, we can clearly see that the price above 62% all the way to 122 zone. The zone that I have highlighted is going to offer us premium pricing on Euro USD. That means a zone where we are going to be hunting for short trades. Remember, when it comes to equilibrium versus premium and equilibrium versus discount, in relation to discount, you just need price to trade below equilibrium for you to consider buying that asset. But in relation to equilibrium versus premium, you need price to trade above 62% for you to consider selling that asset. When price is above 62%, then we consider that price to be a premium price where we can sell the asset. So between the price range of 121.90 and 122.653, this is the ideal area for you to sell Euro USD. That's the ideal zone where you have to hunt for short trades on Euro USD. Now you can see already the zone. If I'm to extend this zone here, you can see we've got our last up close candle, this zone here. We've got our last up close candle, which in turn becomes our what? Our bearish order block. We've got one up here also, right? But that's an extreme. We are already approaching 100% swing point. We would have to be careful there for us to be short sellers. So 121.90, which practically is the 122 price zone, institutional price point. That's an ideal area to consider what? Selling Euro USD. I hope that is clear enough. And if you need more clarification, remember you can always send a message in the group and I'll attend to that. So now you can see already we had a huge price drop from the optimum trade entry, which was also inside our premium zone. You see, this was a very good trade last week, Thursday, 170 pips. Obviously you wouldn't have got all of them, but it was a very good trade to have taken. And in the group I did highlight this on Friday, where we had non-symmetrical divergence between dollar index and GBP USD. So if you were clever enough, if you knew what you were doing, this short on fiber would have been piece of cake. It would have been very easy for you to see that, okay, we are going to see a drop after we clear the 122.165. So Euro USD, we are going to be hunting for short trades from the 122.100 price point. Then we also have USD Chf. USD Chf, we're going to be long. We're going to be hunting for long trades with a target of 0.916. If we are bullish on dollar, we're going to be bullish on USD CHF, and we're also going to be bullish on USD CAD. You can see already USD CAD, we still have a pool of buy stops above we've got a pool of buy stops above the price 129.75. I expect those buy stops to be run on in the coming weeks or so, maybe 2 weeks or 3 weeks. I expect the price to be above that range. That's a couple of 260 pips. So I'll be hunting for long trades on USD CAD. And then we also have Brent Crude Oil. Price traded to our monthly bearish rejection broke. Remember, I sent this chart in the group 2 weeks ago, a week ago, I think, yeah, 2 weeks ago. And we had a nice trade from the main threshold of the bearish OP, the gray shaded area. We dropped a couple of 70 pips, and then the previous week price traded into $66.75 per barrel, where we found resistance and price dropped. It's not a coincidence that price dropped here, guys. It's not a coincidence. You can see when you look to your left, this drop here, when you look to the left, that's the opening price of this last up candle here, the $66.74 per barrel, which represents our optimum trade entry on Brent. So that yielded a couple of 272 pips. If you had got more than 50 or between 150, then that would have been a very good trade. So you see the advantages of keeping your setups highlighted on the chart. Brent Crude, this is a significant swing point from $86 all the way to $19, which we reached during start of COVID. That's when oil dropped massively, right? That's a significant swing point. And when you place your fibs there, you can see this range is coming in between the 62 and the 79% level, which is a premium pricing point where we hunt for short trades. So with that said, short trades will be ideal on Brent in the coming weeks. Then we've got Nzdjpy. We have a huge rejection of price from the 1880 zone. We had a huge rejection. That's the bearish order block that we have here. Price rejected and dropped massively. I still have my order flow concept marked in on this chart. Most of them came fruitful. Remember, we were long on this pair. Only when we reached this level, that's when we were hunting for short trades, but we closed way above. So that would have been an invalid trade. So yeah, that's pretty much about it for this coming week forecast, guys. And for those that are seeing this video on Wednesday, because it will only be available to the public on Wednesdays, because the mentorship group gets to receive this video on a Sunday, and only on Wednesday, that's when I'll make public the video. So if you want to get the video instantly to your inbox, just get a hold of me, or you can join the mentorship program, then we can gladly help you. So with that said, guys, I wish you guys good luck and happy trading in the coming week. Thank you.